Hello and welcome to the January update for the Hedge Invest Benbridge EM Absolute Return Fund. January was a difficult month for markets with MSCI World Index down over 5% and some of the US indices down between 5 and 10% for the month. The Fed, this was mainly driven by the Fed taking a very hawkish tone in their meeting minutes, and the market now adjusting its outlook towards approximately 4 to 5 rate hikes in 2022 versus the previous consensus of 2 to 3 rate hikes. Adding to this was tensions between Russia and Ukraine, with significant troop deployments along the border and a raising of tensions with the US intervening and making a lot of noise, and this has led to high energy prices and a heightened state of tension between the two countries and some de-risking in equity markets. We saw significant de-risking of portfolios between people with long-short strategies, long-only strategies, retail investors during the month, and significant outflows from equities. Given our positioning, we came in running a net exposure in the region of about 15% and quite a low gross, and so we were in a position to add to those dislocations. And so when markets were in turmoil, we added to some of the holdings where we have high conviction that had been traded down, and we also took the opportunity to add to some new positions in the portfolio, specifically looking at Chile, where the politics has improved significantly. We've been watching several companies there for quite a while, but given our framework of good company, bad company, and then overlaying that with good country, bad country, we feel that Chile is now in that moment where we're starting to move from bad country to good country. The politics has stabilized, the more visibility around government and what they're planning to do, and that gives us much more confidence in those core fundamental ideas that we have in Chile. The other areas that we've added to are robotics, where we think that there is a significant capex cycle globally going to be driven due to the high inflation that we're seeing in markets. Companies are going to be encouraged to invest in automation and greater efficiency, and this is where we think the robotics companies will do very well. And also in the energy space, where we have some more clarity in Brazil around how the oil and gas companies are going to be treated by the government, and got greater conviction. So we've been adding in the energy space in Brazil. Those are kind of the highlights. We've been very active in the portfolio. If anybody would like a more detailed update and or dig into the portfolio more, we're happy to do that. Just reach out to your sales representative. Thank you.